People have been asking me about Bitcoin and cryptocurrency for years now, at dinner parties, at shareholder meetings, on television interviews. They all want to know the same thing. Warren, why won't you buy Bitcoin? And my answer has never changed, not in 2018, not in 2022, and not now in 2026, because I have spent 60 years learning what makes a great investment, and cryptocurrency breaks every single rule I have ever learned. Today, I want to explain exactly why I have never bought a single coin, not Bitcoin, not Ethereum, not any of them. And I want to warn you about the specific coins that I believe are the most dangerous investments you can make with your money in 2026. This is not about being old-fashioned. This is not about not understanding technology. This is about one simple question that I ask before every single investment. What does this actually produce? And if the answer is nothing, then I am not interested. Part 1. WHAT makes a real investment. Let me start by explaining what I mean by a real investment. When I buy a stock, I am buying a piece of a real business. That business has employees who come to work every day. It has customers who buy its products. It generates real revenue and real profits. When I bought Coca-Cola in 1988, I was buying a company that sold millions of cans of Coca-Cola every single day to real people all around the world. I could understand exactly how it made money. I could calculate what it was worth. I could see why it would be worth more in 20 years. Now let me ask you a simple question about Bitcoin. What does Bitcoin produce every single day? What value does it create in the world? Can you point to a factory? Can you point to a customer? Can you point to a product that somebody needs? I once said if you told me you owned all the Bitcoin in the world and offered it to me for $25, I would not take it. Because what would I do with it? I would just have to find someone else to sell it to. That is, not investing. That is the greater fool theory. The idea that you buy something not because it has real value, but because you hope to find someone willing to pay more than you did. That is not how I have made money for 60 years, and that is not how you will build lasting wealth either. Real investing is about buying productive assets, assets that create value, assets that generate cash, assets that grow stronger over time. Cryptocurrency does none of these things. Part 2. The coins I warn you about. Most now, let me be specific, because not all coins are equally dangerous. Some are more dangerous than others. The first category I want to warn you about is memecoins. In 2026, there are thousands of memecoins in the market, coins named after dogs, coins named after celebrities, coins that exist for no reason other than to go viral on social media. These coins have absolutely zero underlying value, zero business model, zero productive use. They exist purely because of hype and social media. Attention! And when that attention moves on, the coin collapses. I have seen this pattern my entire life in different forms. Tulips in the 1600s, .com stocks in the 1990s. Memecoins today, different names, same ending. The second category is what I call celebrity coins. In recent years, we have seen politicians launch coins, entertainers launch coins, social media personalities launch coins. The people launching these coins make millions of dollars on day one by selling to excited buyers, and the people who bought those coins almost always end up losing most or all of their money within weeks. This is not investing. This is the transfer of wealth from the excited and uninformed to the connected and clever. The third category is newly launched altcoins with big promises. Every year, hundreds of new cryptocurrencies launch with white papers full of technical language and big promises. They promise to revolutionize finance, to replace banks, to change the world. Most of them disappear within 2 years. Their founders move on, their communities collapse, and the people who bought them are left with nothing. I have spent 60 years watching people fall for promises that sounded too good to be true, and they always were. Part 3. Why people still buy now. I want to be honest about something. I understand why people buy cryptocurrency. I genuinely do. The urge to get rich quickly is one of the most powerful human instincts that exists. I once said the urge to participate in something where it looks like easy money is a human instinct which has been unleashed, and cryptocurrency is the most powerful version of easy money excitement I have ever seen in my lifetime. People look at Bitcoin going from $1 to $60,000 and they think, why did I miss that? But here is what they forget. For every person who bought Bitcoin early and held it through the volatility and made a fortune, there are thousands of people who bought at the wrong time and lost everything. They bought during the excitement of 2021 when Bitcoin was near its all-time high, and then they watched it drop 80%. They bought memecoins because their friends were making money, and then the memecoin collapsed overnight. The stories that go viral are always the people who got rich. The stories that do not go viral are the people who lost their savings. And there are far more of the second story than the first. There is another reason people buy cryptocurrency that I think is important to understand. They have lost faith in traditional systems. They are worried about inflation eating their savings. They are worried about governments and banks, and I understand that worry. Inflation is real. Government debt is a serious concern. But the answer to those very real concerns is not to put your money into something with no underlying value that can drop 80% in a year. The answer is to invest in real businesses that provide real goods and services that people will always need. Part 4. My partner Charlie said my longtime partner Charlie Munger passed away in November 2023 at the age of 99. Charlie was one of the wisest people I have ever known, and Charlie had no patience for cryptocurrency at all. Charlie called trading in Bitcoin just dementia. He said it was beneath the dignity of serious investors, and Charlie was not someone who was afraid of new ideas. He spent his entire life reading and learning and updating his thinking. But Charlie understood something fundamental. He understood that the value of something is ultimately connected to what it produces. Charlie used to say, "Show me the incentive and I will show you the behavior." And when you look at the incentives in the cryptocurrency world, it becomes very clear very quickly the people who benefit most from cryptocurrency are the people who create new coins and sell them to excited buyers, the exchanges that charge fees on every transaction, the influencers who get paid to promote new coins to their followers. The retail investor at the end of this chain is the one who most often ends up losing money. Charlie also said it is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. That line has guided my entire investing life. You do not need to be brilliant to avoid cryptocurrency. You just need to ask one simple question: what does this produce? And if the answer is nothing significant, you move on. Charlie and I asked that question about Bitcoin 20 years ago and we moved on. Part 5. What you should do instead. I know what you are thinking. Warren, if not crypto, then what? And my answer is the same answer I have given for 60 years. Invest in great businesses that you understand, businesses that produce things people need, businesses with competitive advantages that will last for decades. If you do not know how to pick individual stocks, then invest in a low-cost index fund that tracks the entire American economy. Over the last 100 years, the American economy has been the greatest wealth creation machine in the history of human civilization. There have been wars, There have been recessions, there have been pandemics, there have been financial crises, and through all of it the American economy has grown. The great businesses have gotten stronger and patient investors have been rewarded. That is not an exciting story. It does not go viral on social media. Nobody is making videos about the guaranteed long-term returns of index funds, but it is the honest truth, and honest truths build more wealth over a lifetime than exciting stories ever will. I have lived that truth for 80 years, and I am the proof. One more thing I want to say before I close. If you have already bought cryptocurrency, I am not saying you are foolish. Many intelligent people have. What I am saying is be honest with yourself about what you are doing. If you are buying cryptocurrency, you are speculating. You are betting that someone will pay more for it tomorrow than you did today. That is a very different thing from investing, and you should size your speculation accordingly, never more than you can afford to lose completely. Closing, so let me summarize what I have told you today. The coins I warn you most strongly against in 2026 are memecoins with no underlying value, celebrity coins designed to transfer your wealth to the already wealthy, and newly launched altcoins built on promises that almost never get kept. The reason I warn against them is not complicated. A great investment produces something. It generates cash. It creates real value in the world. These coins produce nothing. They generate no cash. They create no real value. And in the long run, the price of anything must eventually reflect the value it creates. I have spent 60 years building wealth by finding the gap between price and value, and when I look at most of the cryptocurrency market in 2026, I see prices that have gone far beyond any reasonable measure of value. That gap always closes eventually, it always has, and when it does, the people holding these coins will be left with painful lessons. I hope you are not one of them. Be patient, be disciplined. Ask, what does this produce? Those 3 habits have served me well for 93 years, and they will serve you well for the rest of your life. Thank you for listening. Spend your time and your money wisely, because both are more valuable than most people realize until it is too late.